All right, welcome back. So it looks like there is some more news today in the cryptocurrency space, this time revolving around regulators coming after staking. And people were worried about this back in 2021, but now it looks like it's definitely something to be afraid of. This article is out of Decrypt. I'm going to read through this article really quickly and as well go through another one that just came out which ties into this. This is titled, Are Regulators Taking Aim at Cryptocurrency Staking? Rumors Suggest New SEC Scrutiny. This is a Twitter thread by the Coinbase CEO, Brian Armstrong, has renewed fears that the feds could clamp down on staking. U.S. regulators continue to tighten their reins on crypto. Rumors are swirling that the next target could be the practice of cryptocurrency staking, and this is something that is done very, very widely across the entire space, not just on Ethereum. We are hearing rumors that the SEC would like to get rid of crypto staking in the U.S. for retail customers, Coinbase CEO or Coinbase co-founder and CEO Brian Armstrong tweeted Wednesday. He's quoted in saying, "I hope that's not the case, as I believe it would be a terrible path for the U.S. if that was allowed to happen. It would also be extremely bad for the market because Ethereum is now proof of stake, and they're doing everything that they can to try to label Ethereum and the rest of the cryptocurrency tokens as unregulated securities." Goes on to explain, staking is the process by which users can deposit proof of stake tokens to a blockchain to help secure the network, with stakers receiving rewards for doing so. After Armstrong's tweet, at least one crypto Twitter commentator claimed to have confirmed a multi-agency action against Coinbase. However, sources close to the matter told Decrypt that the claim was unsubstantiated. Paul Grewal, chief legal officer at Coinbase, said succinctly, "Totally false." Well, we will see. It's probably trying to, protect their stock, if anything. Following the collapse of FTX in November 2022, the SEC has made cryptocurrency and digital assets a top priority of its examination division for 2023. And again, I think a lot of that is by design. Just the entire collapse of the whole CeFi centralized finance thing. I think it's all by design, but that remains to be seen. The division will conduct examination of broker-dealers and RIAs that are using emerging financial technologies or employing new practices, including technological and online solutions to meet the demands of compliance and marketing and to service investors, the agency said. Also on Wednesday, Bloomberg reported cryptocurrency exchange Kraken faces an SEC probe over claims of offering unregistered securities, citing a person with knowledge on the matter. And again, they are doing everything that they can to label all of cryptocurrency, all the tokens, as unregulated securities. That's going to allow them to come after them and to tighten down their censorship and regulation of the market. The SEC and its chair, Gary Gensler, have been long accused of regulation by enforcement, which is what is happening, something Armstrong and others said will encourage companies to operate offshore. Exactly. Both regulators and politicians like U.S. Senator Elizabeth Warren say the crypto industry is scared of a strong SEC, whatever that means, adding that the agency needs to do even more across the entire crypto market. What about the rest of the market, like the stock market and the things that are going on, with these senators having way too much money for being a senator? I mean, just look at Nancy Pelosi's, portfolio. Where's the SEC when it comes to that? I would like to see them take some strong action there. There's another quote here. "We need to make sure that that new technologies are encouraged to grow in the U.S. and not stifled by lack of clear rules," Armstrong wrote. "When it comes to financial services and Web3, it is a matter of national security that these capabilities be built out in the U.S. And I guess I kind of agree with that. And he's got a Twitter thread here that kind of goes through his thoughts about what's been kind of happening right now at the SEC and regulation. In a tweet posted an hour after Armstrong's initial read, Coinbase tweeted its support for staking, saying that it has the potential to accelerate the adoption of digital payments globally because it is not dependent on setting up expensive centralized intermediaries, which is true, I guess. For staking to work successfully, it needs to remain decentralized, neutral, and global, Coinbase wrote. I guess that kind of flies in the face of it just being built out in the US, but again, I agree with this sentiment more or less, especially decentralized. I think that's the key component here is, get your cryptocurrency off these exchanges like Coinbase, like Kraken, get them into the DeFi application sphere. You can find those on DeFi Llama and other sites like DeFi Llama, and start taking advantage of the apps that have been well built out for you to use. Other agencies, U.S. agencies, wading into crypto include the FTC, the CFTC, the Justice Department, and the IRS. So the alphabet boys are coming, which is being sued by a Tennessee couple attempting to recover federal income taxes levied on the Tennessee couple's stake-generated Tezos in 2021. Tezos was another big player back in the earlier crypto bull run that we saw in 2017. The lawsuit stems from a Tezos user being denied a refund from the IRS, saying the couple owed taxes for earning staking rewards. And Josh Jarrett has posted those receipts here. I would encourage you guys to read through this because it's definitely really interesting. Kind of like as a blast from the past, so to speak. The lawsuit was joined on Tuesday by crypto giant Consensus, which said it would financially support the challenge. Hopefully, Armstrong wrote, "We can work together to publish clear rules for the industry and come up with sensible solutions that protect consumers while preserving innovation and national security interests." And ultimately, I guess the only regulation that I would be for is ways to protect people's anonymity and privacy and make it easier for people to get in and out of the cryptocurrency market using cash if they want to, because that's really what I'm all about. I'm all about self-custody, privacy, anonymity. That's what the whole point of decentralized finance is. It's to help you get away from the centralized banking system, which is not something that they want, obviously. The elites are going to do everything that they can to fight that. But this ties in to an article that just came out, and it's about how the SEC was putting pressure on Kraken. And so Kraken has agreed to shutter crypto staking operations to settle SEC charges. This is by a source. And this is fresh. This just came out maybe an hour ago. The SEC meeting in a closed-door session on Tuesday. This is the Kraken CEO, David Ripley. Kraken has agreed to shut its cryptocurrency staking operations to settle charges with the U.S. Securities and Exchange Commission, according to an industry source briefed on the matter. And this definitely flies in the face of what the Coinbase guy there had to say about them receiving pressure that the SEC was also coming after them for the same thing. Well, him saying it's totally false. You can see Kraken now, which is one of the biggest exchanges, centralized exchanges in the U.S., now literally shutting down its staking. And I'm sure that they're going to shut down some of the other parts of their exchange to kind of fall in line as well. The SEC will discuss and vote on the settlement during a closed-door commission meeting on Thursday afternoon, and an announcement may come later in the day. The industry person told Coindesk. A second person anticipates an announcement around 4 p.m. Eastern Standard Time. So yeah, we are being briefed in real time right now. A Kraken spokesperson declined to comment. The SEC spokespeople didn't immediately return requests for comment. Kraken offers a number of services under its staking umbrella, including crypto lending product, which offers 24%, and they also expect this to be shut down. And that's what I was talking about. There's some other parts of their exchange that are probably going to have to be shuttered now that they're taking down staking. And 24%, that's really big. Those are kind of like Terra Luna style APYs that we're seeing. Promising. So Kraken's staking service offered a 20% APY, promising to send customers staking rewards twice per week. So this is like a form of passive income that you can kind of get. And again, these exact same things, they exist in the DeFi space. Now, sure, I guess they're not offering you 20%, but that's not sustainable at the end of the day. It's just really not. I mean, sometimes when there's some initial kind of DeFi farming yields, maybe a token has, or a project has launched a new part of their protocol and they want to increase liquidity for a new pair, they might offer some pretty crazy APYs to attract people, but they're never going to last. I mean, to get 20% on the forever, it's just ridiculous. There's no way that can be sustainable. Unless it's literally just the inflation of a token, whatever said token it is. It's just endless inflation, which is, how is that economically viable? It doesn't make any sense. The vote comes a day after Coinbase. Yeah, this was just yesterday. Coinbase CEO Brian Armstrong tweeted that he heard rumors that the SEC would bar retail customers from engaging in staking. This is the technique of pledging cryptocurrencies to run blockchains such as Ethereum. And that's going to be the one that's probably going to come under the most pressure. And I'm sure the cryptocurrency market is not liking this today. Yeah, you can see here, there's a massive drop here on Ethereum. And I'm sure the rest of the market is following. Yep, pretty much all red across the board. Same thing with Bitcoin. And sure, I mean, like, if you look at the cryptocurrency space right now, we have seen a really good month overall. Some of the AI tokens, Big Data Protocol, Singularity, some of the other smaller ones, they did huge runs just this past week, actually. But overall, the cryptocurrency space is still dominated by the majors, and they're kind of the ones that are, kind of pushing the crypto space along. And you can kind of see here, this isn't a huge drop, I guess, but when you think about this market overall, we're still way down here in this kind of a gully area. And we did see a bit of a breakout from this position here, but this year, I don't really think we're going to see a cryptocurrency bull run. I'm just not seeing it, given all the geopolitical factors, the issues around inflation, which is way higher than they're letting people know right now. It's factors pointing towards the long-term effects of the lockdowns as well. I mean, there's really no reason why cryptocurrency should see a massive bull run this year. Perhaps 2024, 2025. That's more or less where my bets are, but I would like to be wrong. I mean, if the cryptocurrency market was to break out and go into another bull run this year, I would benefit from that greatly. I know many other people would. But other than that, that is all I got for you guys on these articles today. Let me know what you guys think about this in the comments section. Are you staking? Is this going to affect you personally? Do you think that this is a bad thing overall? I personally do. And if you enjoyed the content, please leave me a like, consider subscribing to the channel, and I will catch you guys on the next one. Take care.